Good evening, good evening, good evening. I hope everyone is doing well. This is episode 3 of Alpha Root Trading. And what can I say? The market is really playing games with swing traders, day traders, and investors. The market is giving you it's giving you signs that it can go up. It's giving you signs that it can go down. All in the meanwhile, it has confluences. It also has contradictions. So this is the time where I would say this is the type of market where it's a strategic, people with strategy win, not stock picking, not concepts. But if you have a decent strategy, the strategy is here to protect you more so than it is for you to make money. So let's check everything out. Let's see what we did today. Today's going to be a short day because it gave us some signs, but nothing really got confirmed today. But it did give us some signs on some certain things, all right? So let's rock and roll. You know how we do it. We talk through the charts, right? We talk through the charts. Let's get to the charts. All right. So if we look at the first particular chart here, is the SPY. So what do we see on the SPY? So we still have this engulfing bar that we talk about, and the rules are if you close above this particular bar, then you should take it there, even though we do have the 20 moving average coming down. So that's going to be a level. So what it did today is it opened here, it went to the almost to the 20, got above this level, and then it snapped right back. The last part of the trading day, let me show you what the last part of the trading day, look on the hourly chart. The last part of the day, it just went down, 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 down. So I'm not gonna lie, and it was pretty good volume in the last 2 hours of the day. So the reality is this: I have this engulfing bar that I'm looking at, but I also have this doji candle right at the 20 moving average. So the doji would tell me, okay, if we're gonna use this as a location, if we get back below here, then it should go down. But we also have this red candle from December 17th that we talked about. We've been talking about this for a couple of days. The candle to the left, this candle right here, it's been fighting that candle. It even went down and snapped right back up all in one day. Gave you this huge engulfing candle. So the rules are above the engulfing candle or below the engulfing candle. That's the direction it wants to go. But then we're oversold at the same time. But the way we reacted at the 20, it's like it's playing with you to turn right back around. So it's hard to short when it's fighting this red line. It's hard to go long when it's fighting the 20 that's right in front of you, or it won't even close above this particular engulfing bar. Right now, this is what I would say when I say strategy. If I'm you, I am playing the market from the 20 moving average on the daily to the top of this pretty much engulfing bar to the bottom of this doji. Then I'm gonna play it when we get to this location, the red candle from December 17th. Right or wrong, what you need to make sure is the location that you're buying is a location that's going to tell you if you're right or if you're wrong fairly quickly. And I promise you, sometimes it's location more so than direction. This market is a location market. It's not a direction market because as you see, it's been choppy up and down for quite some time. It almost feels like the market is waiting for a 20 moving average. Maybe it's the 20 on the monthly to catch up to it or it's waiting for, let me see the weekly. Where's the weekly 20? I know we're below the weekly 20. And that's another thing. We got the weekly 20 moving average right in front of us. It went there today, right? Yeah, what's the high for this week is 683.36, right? And I think that's today's high. 683.36. All it did is go here, got close to the 20 on the daily, and then touched the 20 on the weekly. This is technically, this is a break, recover, test it, and then if it wants to drop back down again, that's where it wants to drop. It gave you a retest, and it can drop back down. This is a tough one, y'all. This is a tough one. I promise you. I promise you. Now, I'm not gonna sit up here and say the market can't go back up again. It can, but the reality is the trend is down. We're below the 20 moving averages. And if you really wanted to kind of be on the side of safety, play what the trend is telling you. Don't get fooled, but make sure you play from certain locations that tell you if it's right or if you're wrong, okay? So for the SPY, those are the locations I'm looking. I'm looking at the 20 on the daily, which is technically right at the 20 on the weekly. It's really the same location. I'm looking at this particular candle right here, the high from this engulfing candle. And then if we get below the candle that gave you a doji, that means now we're hitting the lowest points of yesterday. This thing might turn. Remember, I told you, sometimes to break through a major door, it has to back up and then get a running start. They might have backed all the way up to the weekly 20 just to get a running start to finally break through this December 12th. But we'll see. All we can do is see and work and see what happens. All right. But there's a story to go up, there's a story to go down. I think up has a little bit more resistance, but we'll see. We'll see. All right, look at the Qs. The Qs did the exact same thing, y'all. It gave us this doji candle, even though the 20 on the Qs is not really, you really can't use it because the Qs has been going sideways and it's been choppy for some time period. It's not a trending 20. Look at this. This is just sideways action. This is all the way from October. We've been just going sideways on the Qs for quite some time. So the 20 moving average does not matter as much until we start breaking levels and trending down. Then that's when the 20 makes sense. Okay. So if you look at the Qs, we got the engulfing candle from yesterday. We did not close above that. I'm curious to see what this looks like. I'm gonna put a line at the bottom of this particular candle. If we break the bottom of this candle and it matches with the SPY's bottom and it matches with some other ones, you definitely need to know those levels. So let's break this all the way down. Let's see where the weekly 20 is. See, it went to the weekly 20 again. See, here we go. It's been below it. It went to the weekly 20. And if this is a location for now, those people that's been trying to short the market, and now they can re-enter their shorts to now sell some more shares, this is doable. This is exactly what that's the location. This 20 moving average on the weekly is the location where you would short. So we'll see. Now, if we start breaking above this level where you got little double tops and things like that, where it was kind of trending sideways for some time, that's a whole nother conversation. I have that line there and just shake it out. But as a trader, please be cautious. Please be careful in what you do and make sure you follow your rules to a T. All right, let's go with IWM. So IWM, same thing, guys. This blue line was a reversal level. It broke that reversal level down, meaning on the weekly, it's telling us it's going to be going down. Then it gave us an engulfing candle compared to this candle, the high and the low. Today it opened here, it shot all the way up here, and then it sold right back down. Gave you a shooting star candle at that location. Let's see what the 20. And it's doing the same thing. And that's why I'm trying to paint the picture for you guys. It's doing the same thing at the same location. It closed below the 20, it retested the 20, it sucked people in, and then it closed right back down again. This 20 moving average on the weekly, whether it's a SPY, the Qs, or whatever it is, has meant something, has absolutely meant something. So let's see what we can do. Let's see what we can do. And then you still have the 20 on the daily that's right here. So I'm gonna be honest with you. The strongest watch point that I would probably be looking at out of everything was if we break the lows on the SPY, the Qs, and IWM below their doji, they're not doji, or their doji shooting star kind of thing all at the same time, that lets me know that we probably gonna try to work our way back down, further back down to certain levels. I'm just watching. Now the story on the upside, I ain't gonna lie, anything on the upside might make me nervous. It makes me feel like it's a rug gonna get pulled under me. It did it today. They literally pulled the rug on people. People might have started feeling euphoria of going up, 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 and then all of a sudden, boom, boom. You see how it happened in just a short time period? These are 15-minute candles. From 145 to 215, 230, the market just said we're reversing all the way back down and we're gonna go right back down below the engulfing candle close. So be careful with that. I'm seeing some things that like it's trying to trap some people. You creating these candles at certain locations. That means something. Now let's look at the Dow. Let's look at the Dow. So the Dow gave us, so I'm gonna repeat myself once again. We have an engulfing candle. Now it gave us a doji candle where it didn't close above it. It got above it, but it didn't close above it. And then it snapped right back down again, right? Let's look at the 20 on the weekly on the Dow. Are we below that? It did the same thing, right close to the 20 on the weekly, and then it kind of rejected that level. So across the board, if you guys have a great trade tomorrow, a great trade would be we get below this particular candle tomorrow. If you start seeing us get below that, that's a good sign for you. On the upside, there's a lot of overhead. This has a daily reversal at this location, plus the 20 moving averages right there. It's going to be very difficult to kind of go long. You're probably going to have to wait for the closes for you to feel more comfortable about going long. More so the close than the open. Okay. Just take your time, pay attention, and see what's going on. Okay. Now, that is our four indexes. Let's go ahead and knock this out. Let's go to our canaries in the coal mine. So every day I'm gonna do a video regarding the four indexes and the canaries to tell you what's going on, and then you kind of paint your picture. Remember, not really telling you what to do, I'm just telling you what to watch out for. Okay, now this is interesting. We have an engulfing candle right here. This is EEM, emerging markets. You see this bad boy? It opened right at that level, it shot up, and then it came right back down, and it closed right at that level. So it's really playing games on people. So what I'm gonna do is I don't trade this, I just watch to see how it closes. Now it does have a gap here that normally traditionally you like to close that gap. It didn't get there, so it might go up some more. But I'm curious to see how we open tomorrow. Are we gonna open down or below? Are we gonna open flat? I'm really curious to see how we open tomorrow. But as of right now, this is below the 20 on the daily. And then we are fighting the 20. We're fighting the 20 on the weekly. But if it turns back around and gives us a weekly close below here and below certain levels, like this green level, that's going to be a problem. So what one thing about the market finds where the pain is and it goes straight to it. So the question is, would it be more pain on the bears if we go up, or more pain on the bulls if we turn right back around and go down? That's where right now, as a trader or an investor, I'm like, "Ooh, there's some I see it for both. I see pain on the way up and I see pain on the way down. So we're in a very interesting location for everything. Okay, so let's check it out. Now, this did the same thing as well. So check it out. We didn't get above the daily reversal. Now it gave us a daily reversal down, and it did not close above 99.41, which is this engulfing candle. It still caught people slipping. It got up there, then it came right back down and closed below it. We never got to close above it. So as you see, that theme is the same thing is going on now. But this is where now we're gonna start cooking. Gold, it closed above the daily reversal. So meaning now on a daily, we bounce off this 20, we got confirmation we're heading back up. Even though we did have this gap right here, and I think it might close the gap. Right now, the trend on gold is going up. We got above that, right? So I'll save that for the report. I'll take that line out of there once I get it. But gold is moving back up again. Bitcoin. Now, Bitcoin has been interesting. Bitcoin popped its head above there, came back down to the 20, rested on the 20, finally now breaking right back above. It just broke right back above a daily reversal. So I'm going to see if we have some type of continuation. If it starts to turn back down below here, right below this particular level, 39.28, that would be a negative. But Bitcoin it's quietly trying to figure something out. Now it may go sideways to let the 20 moving average catch up to then give you another drop back down. So what happens when you get so far extended from a particular moving average? You either have a snap right back to it, you go sideways and let it catch up to it, then it pushes it back down again. Or there's a combination of this coming down and that going up gradually. Right now, that's what Bitcoin look like it might be trying to do is gradually go up and meet it here. But we'll see. We'll see. We'll see. It's still trending down. Bitcoin is still trending down. So I don't want you to get caught and then it drops back down another 5%. And you sitting here like, man, you got to follow the trend, guys. You got to follow the trend. All right, let's go with this. Okay. So nothing major happened here with IYT. The volume dropped down. We kind of went sideways. We really didn't do anything up or down. If you look at the trend, we're definitely still below this particular 20 moving average. This would be our first weekly close below that. So that would be something that's very valuable to know. That's something important to know. Because if you look here, the 20, this is the weekly 20. We getting back down below this area. That's something that means a lot. We start breaking down and start rolling over. We might be heading down for quite some time. Now let's look at RSP. So RSP, this is the weekly 20. We're sitting right on top of that weekly 20, right? Let's see what it did on the day. We also have this engulfing candle from here. The top of this candle, the top of this candle, that's an engulfing candle. But we also have this weekly, let me show you the weekly. This weekly candle, this engulfing candle that we didn't close below. We never got a chance to close it below. We fought it, and this was a previous all-time high. There's a lot going on right here. If we turn back up again, more power to them. If we start closing back above this particular candle and getting up back up above here, we might be trying to get back to the 20 moving average on the daily. But right now, this is just a tough area. I'm not even gonna lie. It's just a tough area that makes sense. We even were down 0.8%. And RSP gives us a broad sense of what the broad market's doing, not just the mega caps. So yeah, this is I'm not gonna lie, this is tough. This is just tough. We have this candle right here, which is a weekly engulfing candle that we never got below. We have this engulfing candle on the daily that we didn't get above or below. We have the previous all-time high that is fighting. We have the 20 moving average on the weekly that is fighting. There's a lot going on for it to go down and for it to go up. It's just a difficult situation. SMH. All right, so let's see what we did. So SMH, the good thing about SMH is we did close above the daily reversal. So I'm gonna give you a positive on that. We closed above that. That is 396.45. We closed at 397.33. We also bounced off of this location of a previous all-time high. We bounced off of it, gave you good volume, and we have continuation back up again. That's a positive thing. The how it reacted at these locations. Then you have this candle right here. You have these two candles right here. So it's fighting levels that it's trying not to get below. That's a positive thing. Now it's kind of in this range where this might run all the way right back up again. It could. So the real move is going to be probably above that or below that is where it's going to give you. But there's a lot of meat between 375 and 427. There's a lot of ways you can trade that. You can trade that across the board. But there's some positive things. It's still below the 20 on the daily, but that's kind of going sideways now. We really can't use the 20 as much because it's just kind of going sideways. I don't know even know if it's going to be a barometer. But now we have to use other ones to kind of give us some prediction on what it's doing. Now TLT's been kind of up in the air, kind of doing its own thing. Today it went down, which means interest rates went up. Um, it's really not giving you any direction for the most part. It is giving you a base. It is giving you a location where it's just basing out and it's just going back and forth. Now we're right back below the 20 moving average on the weekly. We're back below that. But some of that stuff is just sideways. You might not be able to use the 20 on the weekly because it's just going sideways. All right, let's see. US, let's see oil. Now, here we go. Now, here's the story right here. So this is what oil did. So oil gave us a huge down candle with a huge engulfing candle on the daily. Oil's been ripping, it's been ripping, it's been ripping. It was overbought. All of that stuff happened, right? Then today it gave us this real huge hammer candle. It dropped all the way down here, thinking we were going to close below this particular engulfing candle, which would trigger back to the 20. But then it snapped all the way back up again. And now it rejected that bottom and it did it on high volume. So now you have out of the last 7 days, 6 of those days were high volume, and out of those 6 high volume days, five of them were on the way up. So right now, if we get above the high from yesterday, if you do trade oil, pay attention to it. If you get above the high from yesterday with this nasty hammer candle, there's a strong possibility it's going to work its way all the way right back up here. So if you're a futures trader, you might have some real good opportunities coming up, especially when it comes to oil with some areas and some locations. But let's just see. I think it's going to happen overnight. They're going to try to shoot oil up overnight or oil going to crash, whatever. One of the two, oil's going to do something overnight. It's going to be really difficult. They're going to gap it up or gap it down. It's going to be difficult to catch it. The dollar. Okay, what did the dollar do? So the dollar did go close below a daily reversal down. It did have pretty good volume in the dollar today. The dollar was kind of I think it popped back up in the aftermarket. Yeah, it popped back up in the aftermarket. Let's see what it did in the aftermarket. For some reason, it's supposed to be red, but it did something. Let's look. See, I knew it. This is the aftermarket here. So even though it came down, aftermarket, something happened and made the dollar shoot up again, which normally is, I don't want to say the word concerning. It's just a red flag. When the dollar starts ripping and we're at war, that means people might be going to safety, trying to put money into safe assets. Okay, XLE. Okay, so XLE came all the way down to the 20 moving average. Boom, it did not close below the daily moving or the daily reversal down, but it also caused a situation where it's in between where it needs to get back above here for you to feel comfortable of taking it longer. So just like oil and energy stocks kind of go hand in hand for the most part. So it's showing the exact same thing. We got to certain levels, we rejected those levels, and now we're trying to get above certain levels for us to feel more comfortable. All right. Now, last but not least, the financials. What did the financials do? Okay, let's see. Financials. Financials are fighting this red line. Let me show you where this red line is coming from. It is fighting, 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 fighting. It's coming from way back over here, guys. Let me shrink it down. I'm sorry. I know if you're looking at this on your phone, it might be a little difficult, but it's all good. But let me talk you through it. Let me shrink it down some more. It's fighting from May and April of 2005. You see these levels right here, bang, bang. Now we did get below this level already. We ripped through that, came up and then dropped back down again. It's fighting these particular levels because if it breaks these levels, as you see over here, there's a long slide. This might be a level, but this is really the main level right here. That's a long slide for the financials just to continue to drop. Just curious. And if interest rates keep rising, maybe we get to a point where people just won't, don't want to borrow any money because it's just too expensive, just too expensive. All right, so the financials, they haven't recovered, but they did kind of base out here. They're fighting this level. You just got to see what the closes look like and what happens. All right. Well, you guys have a great day. I hope this kind of helps you out. The whole synopsis, you'll get our report later on. Join the Discord. It's totally free, but you'll get our report. You get a chance to look at it. But I'm gonna be honest with you. I'm not gonna sit up here and say I'm the type of person to tell you do this, do that, do that. Right now, this is a market where your strategy is going to save you more so than you know in your direction. Because you're going to have days where there's going to be a snapback of recovery. Then you're going to have days where it's just there to trap you and then drop back down again. Or to go up. It's just difficult. Use your strategy, trade at the particular locations that we identify on the charts, and hopefully come to see you soon. Okay. Hope to see you soon. All right. You guys have a great day. See you tomorrow. Let's see what this market does. Have a good one. Bye.